Good morning, traders. It's Friday, June the 7th. Taking a look at the charts, we'll start off with the SPY. This is the daily chart, and what we're getting at here is yesterday we had a good little sell-off, and the price is starting to dip down to get this a little more complex correction here and to break this low. Overall, we're starting to see our short-term momentum cycles get into this oversold territory. Typically, when we get them down into here, we see a pretty strong recovery. You can see in the past we've seen a strong recovery there. Another one we had a strong recovery here, and another one we had a kind of knee-jerk reaction here in the market, going from an oversold kind of popping. It's a little bit it's still in a complex correction here. But overall, we're getting back down into this level here. And if we take a look at most of the major markets, take a look at the Nasdaq here. The Nasdaq is more or less came down and tagged our 100% Fibonacci measured move on this target here. So we are down to a potential double bottom, which is right down here. To have this double bottom from before. It's also a measured move from our Fibonacci level, which is an A, B, C correction. And we're starting to get a cluster here in the bottom where we're having our momentum, our short term, and our intermediate cycles starting to bottom. But I talked about yesterday's video, we do have to be aware when this is down in these zones here, when they cluster down here, it does provide usually a very significant buying opportunity. The last time we saw it back on the chart, way back over here, we had a very significant run to the upside. But we have to be aware that we could get a very big drop still. That some of the biggest volatility moves happen right as these clusters are taking place. So you get in here, we could see a very sharp drop still. And keep in mind, there's this gap window from way back on the chart that has yet to be filled. So there is potential for the market to go and have a big washout slide, get some big volatility, chop here, and then we could see that cycle fully bottom and then eventually move up and continue to go to new highs. So that's kind of where we're at. We've got all this markets are getting somewhat oversold here. They're in testing support levels, but there is potential here for a final kind of washout. This NASDAQ tech stocks look as though they're ready for one final bout of selling, which will send the VIX higher and wash the market out. And then I think we'll have a very significant reset. That'll be a reset that will have taken place to go higher. So this somewhat little pause here turned into more of a larger correction, which is actually healthy in the market. These multi-week corrections are very healthy, and they allow for higher prices future going forward. But we got to be aware that we could get some pretty big volatility here in the next few days, potentially next week, as this market tries to shake out the longs and put in a new bottom, a pivot low, and go forward there. If we take a look over at let's take a look over at precious metals. Some interesting price action today in precious metals. Gold, nothing too significant, down slightly this morning. If we take a look at miners, they are going to be flat this morning as well. Daily chart doesn't show anything, but what was really interesting was the silver had a massive spike this morning to the downside, a huge sell-off, big volume in pre-market. If we take a look, we'll go to the 1 minute chart here and zoom way back. We'll just scroll back. Actually, I'll keep it all in one chart for now. If we go way back to last night, there it is. So last night, you can see we had huge selling. Somebody hit kind of a big sell button, big sell order, a market order, and they drove silver from just over $16 an ounce all the way down to $14.34 an ounce. Sold off a massive volume and then usually what goes straight up or straight down usually comes straight back to where it left off. So huge sell order, flushed the market out, boom, rebounded with bargain hunters buying right back in, bringing it all right back up to pretty much where it was. And if we just fast forward to this morning, let me just get that price action in here. More or less, we're just still trading sideways with very little loss after all that is said and done. But somebody definitely unloaded a ton of silver in overnight, and obviously not executing it properly from the looks of it, doing a market order and completely forcing the market to get the worst fills possible and drive the price down. So pretty interesting price action. Probably hear about it in the news today. I don't know what that really means going forward, but if we look back on this, let's just look back here and see where that level actually coincides with. We just draw a line from that spike low. So that brings us back to some pretty significant lows in the market, which are right into this support zone right across this level, and of course it was this low over here. So there's potentially silver could fade and work itself all the way down. This could be some foreshadowing of where the price action is headed next, and I wouldn't be surprised. It's trading at a pretty critical support zone here. We've got a pivot here which is broken. We've got a significant pivot here. If it breaks this level, the next level pretty much is down around this 1450 area. So there is potential for silver to unwind and go that direction, which means gold and miners will sell off as well. And of course, we've been talking about that for the last more or less month or so, talking about how gold and silver are probably going to be out of favor until the very end of this year at best, probably. And they're going to continue to be sideways or fading lower until the equities market actually tops out, which I think, again, isn't going to happen for to the end of this year, probably. Taking a quick look over at Bitcoin. Bitcoin had that massive run this spring, and it's been coiling and trading here. It has made this coiling formation repeatedly. It is dwarfed by the big move here, but if we just zoom back in time, this fund doesn't show it. This is a fund that just mimics the Bitcoin, but more or less we have these series of rallies and coil, rally, coil, rally, coil, rally, coil, rally, coil. It happens over and over again, and it's kind of loading up again for potentially a long consolidation, multi-month consolidation, but overall a platform to continue to go higher as digital currencies become more in favor going forward. Taking a quick look at crude oil, down 1.6% this morning. Let me zoom in here on the daily chart. Pretty much came up to our moving average, which isn't showing on the chart right now, but reversed down, had a little bit of a oversold bounce, continues to move down today. It was trading much lower in pre-market trading. It's having a little bit of a rebound with some news came out at 8:30 that kind of sparked a rally in stocks this morning. They were trading lower, and now they're up about 0.25%. So some news has kind of created a bounce, but overall still the bias continues to the downside, and we could see crude oil continue to fade lower along with energy stocks. If we take a look at XLE, this is the energy sector stocks falling down, getting close to potentially, they're set to gap lower again today, and we could see it continue to make new lows, new multi-month lows. You can see how energy stocks completely out of favor, kind of channeling their way down. And I think we're getting to a point here where we're going to eventually see a screaming buy, but energy stocks are clinging on here to a very thin thread of support. This is a pretty significant support zone. Actually, it would be more or less from there down into this low range. So we're flirting at this key level. If this is broken, there could actually be a very significant washout low in energy stocks, which would coincide with a washout low that we're looking for potentially next week with the NASDAQ and the overall equities market. We see a washout low, and it could be the sign of a reversal going forward, but we'll have to just see how that starts to unfold. Last but not least, take a quick look at the chart of bonds. Bonds continue to fall out of favor. Very similar to what we've been talking about, how we expect gold, utilities, and bonds to move out of favor as money, I think, is going to slowly start rotating into the risk-on assets more as the equities market bottoms. So kind of going out of favor here, and I do anticipate to see a rally in equities here very shortly. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.